Welcome back to The Explainer. So, how does an insurance company use AI to get smarter with every single customer it signs up? Well, today we're digging into Lemonade's latest shareholder letter to see how their AI flywheel is doing exactly that, and, kind of turning the whole traditional insurance model on its head.
All right, before we jump in, just the usual heads up. This is all for educational purposes. It is absolutely not financial advice. Everything we're talking about comes straight from Lemonade's public shareholder letter.
So here's our game plan for today. We're going to start with their latest quarterly results, which are, frankly, stunning. Then we'll pop the hood and look at the AI engine, the flywheel that's making it all happen. After that, we'll look for the evidence. Is this thing for real? And finally, we'll look ahead to see how this whole strategy is setting them up for a world full of self-driving cars.
Okay, let's get right into it. Lemonade is calling the fourth quarter of 2025 their strongest ever. Now, that is a pretty bold claim, so let's see what the numbers actually say. First up, their in-force premium, which is basically the total value of all their active insurance policies, it grew by 31% compared to last year. That's a huge sign that they're growing, and growing fast. And all that growth? It's translating directly into profit. Their gross profit shot up by a massive 73%. So this tells us they aren't just getting bigger, they're getting way more profitable as they do it.
But really, for any insurance company, this is the number that tells the real story, their gross loss ratio. So for every dollar they collect, how much they have to pay out in claims, it improved by 11 percentage points. That means they're keeping 11 more cents of every single dollar than they were just a year ago. That is a huge leap in efficiency. So how on earth are they doing it?
And that brings us to the how, the engine behind these results. It's something Lemonade calls their AI data flywheel, and it's really the core of their entire strategy.
And they say it plain as day right in their letter. Their model isn't just growing, it's compounding. In their words, growth is the gift that keeps on giving. It's not just about getting bigger, it's about getting smarter.
And this visualizes it perfectly. It all starts with more customers. Now, unlike old-school insurers, Lemonade gathers tons of data through its app. This data then feeds their AI, making it way smarter at predicting risk. That intelligence leads to better underwriting decisions, which means better pricing, fewer losses, and ultimately higher profits. And what do they do with that profit? They pour it right back into acquiring more customers, which spins the whole flywheel even faster. It's a beautiful self-reinforcing loop.
Okay, so the flywheel sounds great in theory, right? It makes perfect sense on a slide. But is it actually working in the real world? Let's look at the evidence.
And the proof really is in the numbers. This chart shows their loss ratio over the last year, which just helps smooth out any bumps. And as you can see, there's a clear, steady downward trend. Quarter after quarter, they're getting consistently better at managing their risk.
But here's where it gets really dramatic. Look at the difference between the fourth quarter of this year and last year. The loss ratio just plummeted, going from 63% all the way down to 52%. I mean, in just 1 year, they have fundamentally improved their core business of pricing insurance. That is the flywheel delivering tangible results.
So let's just zero in on this. That 11 percentage point improvement, that's not just some random number on a slide. That is the direct result of the AI flywheel we were just talking about. As the flywheel spins faster, the AI gets better and better at pricing risk, which leads directly to this, paying out 11 cents less for every single dollar that comes in the door.
All right, so we've seen the impressive results and the AI engine that's driving them. Now let's look to the future, because Lemonade is already positioning itself for the next massive shift in the insurance world, self-driving cars.
This is honestly the multi-trillion-dollar question that the entire industry is facing. As we get closer and closer to an autonomous future, this is the problem that needs to be solved, and Lemonade is tackling it head-on.
Their answer is this really elegant concept called autonomy-aware pricing. And the logic behind it is just beautifully simple. The price you pay for insurance should depend on who or what is actually doing the driving.
What this means is they can use real-time data from the car to tell when a person is driving versus when an autonomous system, like Tesla's full self-driving, is engaged. Each of those miles gets its own risk profile, and because of that, its own price.
And here it is. This is the game-changing number. Right now, Lemonade is pricing miles driven by Tesla's FSD system at a 50% discount, a full 50%. Why? It's simple. The data shows the AI is a safer driver. They're literally charging half the price for what they see as half the risk.
And this is why it all matters so much. Lemonade believes their entire data-first platform is built specifically for this future.
While older, traditional insurance companies might take years to adapt, Lemonade can adjust its pricing pretty much in real time as these autonomous systems get even safer. This could allow them to just scoop up the entire market of early adopters.
So the real takeaway here is that Lemonade's AI flywheel isn't just about winning today. It's about building what could be an almost insurmountable data advantage for tomorrow. They're showing that in this new world, data isn't just some resource, it's a compounding asset, which, leaves us all with a pretty fascinating question to think about.
Hey, if you found this breakdown helpful, do me a favor and like and subscribe for more explainers. Thanks for watching.